Right. So I have quite a number of pairs that I want us to look into. There are quite a number of pairs that I want us to look into. Starting with obviously I'm going to focus mainly on the main pairs that I trade, and even that even on the major pairs when it comes to currency pairs. So I'm going to start with odd USD. We're not going to waste much time going to the DXY. We'll look into the DXY if we get time. But some of the things that I want to say, even if we don't look into the DXY, still um, we'll still be able to come up with trade setups and all that. So there's ODSD, which is a pair that I saw an opportunity actually today on. I actually saw it on a very, very crucial zone in the morning, and it actually it has given some of the few confirmations, especially on the lower time frames, on the M5, M15, whatsoever. So let me just go to the highest of time frame. Let me see if I can show you. Right. So let me see if I can start from the monthly. I believe the monthly, maybe it also has something else of value that we can take advantage of while it's just still on the same pair. Right. So if by any means you have other pairs that you want me to look into, you can actually type them there in the chat box. If you have any other pair that you want me to look at when it comes to the indices and the currencies. If you have any other pair that you want me to look into, you can actually type there in the chat box. Then we'll look into it just now. So I'm not going to waste much time on most of these other pairs that maybe some of you don't suggest. I'll just stick to the ones that you guys will be suggesting. So I'm going to start, as I said, with ODSD. Let me start with ODSD since it's a pair that I think I was already watching. It's a pair that I was already actually watching throughout the entire day today. So there's this thing now whereby when it comes to trading, there's this question that people always have, which is which coins do I focus on or whatever? Which pairs? I mean, not which coin. I'm actually talking the crypto language now. Which pairs do I focus on? That's a question that it doesn't have one answer to it because now it depends with what you're trying to achieve as well as how you are treating each and every single account that you might be having. So you can have you can have one account where maybe you're focusing on one or two pairs strictly on that account. Then you can actually now have another account where you're mainly focusing on opportunities based on their availability. So if an opportunity is available, that's when you that's what you just focus on. So you can have two accounts. One where you are focused on an individual pair or two, then the other one where so yeah, just looking at the market, not waste much time on that. You can see that here they've been bullish. This is the monthly. It's very fundamental for you to just have even a rough idea on the monthly. For those that did watch my last video that we posted, I think yesterday, you saw me starting as far as the monthly, going down all the way. So yeah, you can see that we sort of like have a bullish market structure currently from the monthly, where you can see that okay, here they obviously they were downtrending. They were downtrending because they took out this swing low previously, right? Then obviously yeah, they changed character. If they change character, that's now a swing higher high, swing higher low, swing higher high. They came back all the way to the swing higher low. So based on the monthly, this is so crucial information now because we are now at a swing higher low point. If you're not at a swing higher low point, it means the probability of this market shooting up for a very, very long time, it's very high. So our first target when it comes to where this market is right now, we are going to look at internal structure, which is this one, where we have that simple break of structure there, dropped down, went up, obviously didn't break structure again here. So according to that, our first major target currently, looking at the monthly, the major target, obviously I'll also show you other confirmations that you need to look into from the lower time frame perspective. But the major target that I'm looking at is that one. If they come there, of which that's where we're actually. So imagine now, once you successfully manage to enter a, an opportunity like this, that is going to be buying for a very, very, very long time like that. Imagine how long you're going to be even holding and scaling in as it will be going up. So after I have my monthly analysis like this on the lower time frames, now we now need confirmations here. We now need lower time frame confirmations there. Once we have those, we'll start to buy up until we get there. The same way I think I also illustrated on the video that I posted yesterday. So on the monthly, we are done. Let's go down to the weekly. The weekly, the daily. Let's see if there's anything else that is interesting or that is fundamental. So looking at the weekly now, you have obviously this internal sub-internal price action whereby they were also downtrending as they were coming down, of which those are opportunities of selling actually that the markets were giving you all the way. Those were so many multiple selling opportunities that this pair presented all the way since when was this? Since up there. This was actually in 2021. Oh, 2021, all the way here, 2022 there. 20, so imagine now from 2022 up until now 2025, they've just been downtrending, meaning they've just been giving you these major sell setups. If you're going to put some structure to it, you can see there they broke structure there, they broke structure there. We can also say the broke structure here, the broke structure as well there, something like this, right? So they've been downtrending. So based on this now, we can say we have our major target, which is there. Based on the weekly, the level that they have to break, they have to take out this zone here for them to go all the way to that next level there as a TP, right? Then obviously someone can also put another supply zone maybe here. So these are some of the major targets that you'll be looking for price to come to. Right, so dropping down, you can see that here they were downtrending. Then here they sort of like try to shift. So here, once they check out a certain level here, they can actually confirm that they're now bullish, of which I think we can now see that on a minor time frame. For example, this is the daily. So you realize that um once you use the people, they don't even understand this thing called top down analysis. That's the honest truth that I can say. The issue of top down analysis, most people they don't even understand what it is because you can't tell us that you're doing top down analysis while you're starting your analysis on the daily. Let's say I started on the daily. I was just going to start here. I was just going to come, like in this case, I'll come here. Okay, I'll just tell you that, guys, this market is bearish. You can see that's a swing swing low, that's a swing lower high, that's a swing lower low. And the market is where? The market is on a swing lower high, right? This is what I was going to do. Then I was going to tell you, just go to the lower time frame, anticipate confirmation there, then we sell. Right? This is me just looking at the market from the daily only. So imagine now you miss out on information, crucial information, like the information that is there on the monthly, which is actually giving us data that this market is on a major buying zone, and according to the lower time frame, they now have to start confirming price action to the upside, or have to start printing bullish price action to the upside. because based on the zone that we are at on the monthly, which is a very, very, very crucial zone like this. So if you're going to start your analysis on the daily like this, most times, especially in times like this, you can actually be limited in terms of even your trading decision there. Someone here might just say we are potentially going to have swing sales, but is that really fully true? Because now if they take out this, that's obviously your internal change of character there. And once an internal change of character, it means that's the confirmation that we now have for us to now say that now we are bullish. Now we can even target these one, two, up until we get to the third final last target that we are anticipating. So once they close above here, the next thing to anticipate, obviously, it's a slight pullback before a continuation up. And in this case, your pullback, it will happen around, you can see that here, there's a zone that is there. There's also a fair value gap that is there. I'll just mark the fair value gap. I think the other lower time frames will give me a clear zone. I like the fact that even on the 8 hour, they've already taken out, or price have already closed above there. So price closing above there. So this is the zone where we're anticipating the pullback. So in this case, you can even have a swing pullback sell using a lower time frame structure. In this case, your lower time frame structure, you're looking at your H1, M15, M30. That is what. So once we get a change of character there on the lower time frames up there, it means that is what will facilitate now this. Then once they get there, you want another change of character as well on the lower time frames that will facilitate the continuation. So this is the major structure that I have currently on USD. You can actually also have a similar setup because it's actually presenting those major, 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 major move to the upside. If you look at the first initial move that happened on USD, once they go to the swing higher point, swing higher low point, look at this one. They actually bought for almost 1, 2, 3, 4, 5, 6, 7, almost 7 months. They bought for 7 months. So imagine right now we are in April. The next 7 months, it means we're almost getting to November or December. Imagine now you having to be a part of a move like that. That's why I said when it comes to which pairs do I trade, which which pairs do I select, or whatever, you can have two accounts where you have one account specifically focusing on your main pair or your main two pairs, uh, two pairs max roughly, right? Then the other one now is the one where you now involve other pairs based on their availability and also based on how good the setup is. For example, this according to me, this is a very good setup based on where this market is from the highest of time frames. So on the lower time frames, once imagine now, once they buy for the next 6 7 months, and you actually were involved in those buys starting from here, then you were involved in those buys starting from here. Imagine now the beauty in that. All you are now doing is the market will be going to the upside is scaling in, obviously scaling in using structure, not scaling in using emotions, but basically waiting for structure to print out, then you enter, wait for structure to print out, then you enter. So now this is a major buying zone where I'm actually anticipating the market to pull back onto before they continue buying. So enough said about this. So this is the main opportunity here that you can even wait for price to. Instead, even if you're not going to be waiting for price to come here, I can even show you how to enter even these pullback sells into this region, because we have. So it means if you're going to start once the lower time frames, your M15, M30, M10, M20, all those lower time frames, once they confirm a bearish uh, structure up there, it means we now have a target already down here, which is this one. Once they get there, then we also now need another change of character to now buy all the way to the upside. So let's go down now lower to 15 minute. On the 15 minute, you can see clear bullish market structure. Very simple price action there, block structure there, block structure there. I think they also broke structure here again. So now the change of character that someone might be waiting for, according to 15 minute, is this one. According to 15 minute, this is the change of character that is going to facilitate that pullback to the downside. All these were buying opportunities that the market was just giving you, whereby after they broke this structure, I think this opportunity came on the 17th. This is actually last week on Friday, last week on Thursday, I mean. Very simple setup. And do you know the beauty in this? Some of you maybe you don't understand how some of these things operate. In this case, for example, let's say they gave you this simple pullback like this. This trade, this is the maximum that the market will ever go to because this is a higher low, right? And they were still bullish because they had not even broken or changed character there like that. So, which means, according to the market, they still had a room for them to keep buying for a very long time. So imagine once they enter in this zone like this, then I now want to, even if I enter aggressively right there on this zone, right? They enter my region there in on 10 minutes, the confirmation that I need to buy, I can even wait for this. Once this happens, even if I enter, even if I risk 50% of my account, even if I risk 70% of my account there, according to price action, I am correct. That risk is not even a risk, right? It's only I like what this other famous trader, I forgot the name, but he's a very, very big billionaire trader there who actually says risk is only risk when you don't know what you're doing. Risk is only risk when you don't know what you're doing. So when you know what you're doing, there's the idea of risk is not even there. So imagine you if you could have maximized there, then they pulled back obviously again and did the same thing again there. You maximize again. By the time this market comes all the way up there, you discover that your account balance it will no longer be the same because now if you risk, let's say 50% there, by the time the market comes above there, which is around almost 1 to 3, 1 to 4, it means by the time the market gets there, your account is almost on 200%, which is almost times two or times whatever, depending on how also aggressively you would have entered there. So those are just some of the things that people are still yet to understand. So here again, you could have also entered, I think, around this region here. That was the confirmation that you could have waited for. Price closing above there, you could have entered those buys. Nicely, nicely, nicely held up until there. This one happened actually today. Today, midnight, that's where this opportunity, while everyone else was sleeping, an opportunity for you to even make good money on the market was presented. That's why, you get to a point as a trader where sometimes sleeping too much it can be a hindrance to your success as a trader because you might discover that you find yourself sleeping at the same time where the market is presenting one of those best setups, one of the best setups that was going to change the entire trajectory of your account. Then you find yourself in that same time sleeping. So this is what I have so far. And according to M15, they have to take out this, right? Take out this, then obviously give us bearish market structure up until, and we have our target already, which is down here. So according to M15, once you see this market doing this, start to look for more selling opportunities. Once you see this, start to look for selling opportunities only up until we get where? Here. Once you get here again, once you see this, obviously it don't happen in a straight way. Obviously, they can even play around with it, whereby they can come like this, come like that, come like this, come like that, come like this, come like that, come like this, then boom, boom. This is still a change of character again. So once you see something like this again, you have to also now start to focus on buying opportunities. So once we have this, focus on selling opportunities. Once we have that, focus on buying opportunities. I think I've explained fully here. These are opportunities that you can't afford to miss, especially once you have been given a detailed analysis way of what to look out for and what not to look out for. So on the M5, obviously, they've started to print out some bearish market structure. That's why you saw in the beginning, I think you saw, some of you saw my chart where I actually had a bearish market structure printing out on the M5, where we have this change of character there. Then they came back to this supply zone. Let me just zoom in here. Let me just zoom in right here. Change of character here. This is liquidity, all right? Obviously, in that is your supply zone there. So they came back all the way there, dropped very much on this level. Even if you went in aggressively there, based on this M5 structure, you are correct. That risk that you would have taken is not even considered a risk because the confirmations have happened. These are, I wish I could explain this to someone who knows the value of, once you now know the value of understanding how the market moves and knowing even the value of a single, the value of $10, the value of $100, the value of $1,000, the value of even 5,000 or $10,000 traded properly. Let's say you had even your last $100 here. Then you wait for a confirmation like this on the M5. Wait for the market to come there. Even if, let's say, of which it's something that I recommend to only people that now understand what's happening. Even if, let's say, we decided to risk the entire $100 there, look at the risk to reward. It's almost 1:10. By the time the market gets there, it's almost as if you are going to make $1,000 from $100 just by you waiting properly for the correct confirmation. Then you jump in. So now they are still printing out bearish market structure here. They've also broken structure here. So we have something like this: lower high there, lower low here. Right here, there's nothing there. This is now our lower low. So here they can even come to this level, which is a very beautiful supply zone there for us to sell from. So they can still push into that zone. Then once they push into that zone, even if you go to M1, because here I'm on M5, even if you go to M1 and wait for that candle shift, it's also fine. Then you jump in even using M1. M1, M2, you can still play around with those if you want just those candle shifts on that zone. So this pair, it's also a pair that I think I'm going to monitor with you guys throughout up until it does all the moves that we are talking about, both the pullback sells as well as the continuation buys. So that's it on odd USD. Let's look at let's quickly look at other pairs like your GBP USD, your Euro USD quickly. Right. So this is GBP USD. And you can see that here, based on this, they actually broke right there. And they're overall bearish, right? Of which I think is one of those pairs that I'm still working on those videos that I'm uploading on YouTube. Simple bearish market structure, right? They are bearish. Then here, they arrived here, of which they are almost still playing in a bullish market structure way there. So here, I have this extreme supply where they can even push to, if they want to push here, they can even push all the way there. Because now they are pulling back all the way up in a bullish order flow manner. So they can even do something like this before they drop. So if you go down lower, there's a beautiful major trade that happened this year from the beginning of the year. They gave you this swing buy opportunity on this level here. That was a major, major buying opportunity that you could have taken ever since January, the beginning of this year. That was a major swing buying opportunity for GBPUSD from here. Even up until the market is now, you could have still been holding. Throughout on the lower time frames, there were um so many entries that you could have entered along the way up until where the market is now. So I'm actually anticipating the market to break here. If it doesn't break, then the shifts here. It's also fine. There's nothing wrong with that necessarily. But one of my major zones that I'm anticipating price to still push to is around 1.40, 1.4900, somewhere around there. Those are some of the levels that I'm anticipating price to push onto. So this is my analysis currently on GBPUSD. Potentially now they can break it there. Once they break there, we now need to observe and follow through structure. If it keeps giving us those mini lower time frame bullish market structures up until they get there, we'll actually take advantage of those up until we reach that level there. So throughout here, those are just buying opportunities as I explained. If you go to a lower time frame, what we must see throughout from here up until where the market is, we have to see bullish market structure. Trend line traders in this case, they could have even drawn a simple trend line like this, where you can see, okay, that was a downtrend. Now they're uptrending. Simple explanation to that, right? Which is, there's nothing wrong with that. Even here, I think someone could have also done the same. The problem that I have, or the thing that I don't recommend, especially my students in the academy, I think I've told them over and over again, if you're going to start analyzing, don't start here on putting these things that I'm putting, on putting these trend lines. No, that's a secondary confluence, yes, which is, there's nothing wrong with it, but I want you to start on the primary confluence, which is you identifying the main candles, the main reason why price is going to go up, the main reason why price is going to go down. That's the main thing. All these other things are just other things that you can add on to your analysis if you want to add them. Even if I don't add them, still we must be able to successfully have successful trades up until the market reached where it is now. So going to the H4, H1, we now must see bullish market structure printing out from here. Let's go actually to M15. M15 from that zone, which is a major zone, we have to see a change of character to the upside in this region. So if you zoom in properly, you can see that your structure in this case, you had this break here, you had that break of structure there, kept going down, another break of structure here, another change, the change of character happened here. So that is all you needed as a confirmation for you to start buying. Change of character there. Then obviously you would have waited for a pullback. You could have waited for a pullback. Some they could have even bought, especially because remember there are two types of entries. There's a risky entry. A risky entry is an entry that you enter before the change of character. In this case, the risky entry was going to be around maybe around here. After this range was broken, then you could have even bought even around there, right? Before this change, because you know that we've tapped the major zone. So the probability of us changing character there is so high. So you could have held this trade all the way up there. How could you have held it all the way up there? Because if you follow through even on price action, no buying range was broken up until that point or that high level up there. The only range that was now broken was this one. They broke the range, came down, uh, went up again up until they gave this pullback. So this pullback, that was where you're now supposed to enter your buys. This is the confirmation, which is this range being broken like that. Obviously, they did a pullback to the zone. Even if you entered immediately after. So in this case, when I'm looking at the M15 like this, sometimes you might even see me going down to the 10-minute, sometimes even M5, just for me to be able to enter much earlier on the same level, just like this. This is M10, 10-minute. So according to 10-minute, immediately once price closed above here, we're supposed to actually buy. Even if you enter, those guys will have to use the terminology full margin trade. Even if you enter full margin with these confirmations, you discover that your full margin trades, you actually enjoy them, and you won't you won't be a victim to how some full margin traders are trading, where they're just trading full margin without an understanding. So they broke that structure, obviously came for a pullback here. Even if you bought here, they went up. By the time they now start to pull back like this, you could have even came out, came back again here, confirmed here, went up, came back again, confirmed here, went up. So here, that was a confirmation to enter. That was another confirmation to enter. And here, structure was almost now printing out bullish again on that same zone. So them coming back to this, pulling back to this zone, giving you a shift to the upside again on some of these levels, like here and even here. Those were opportunities to enter. You bought there, came back here, they bought again there. All those were opportunities to buy. The last one was this one. Then they go. So you discover that someone who was going to be wise throughout the entire time was going to be someone who you have a target already, whereby you know that the major target based on higher time frame structure is all the way up there. So throughout the entire time, all that you are supposed to be doing is to successfully identify bullish market structure legs or bullish market structure order flow. Follow it throughout up until you get to the highest point, which is there, right? You can go to M15. Right. So as I was saying, from all the way from that weekly major level, you are supposed to be taking um you're supposed to be taking buying opportunities. Imagine the number of buying opportunities that this market has presented since January. January, February, March. Now we are now in April. We're almost closing April. Almost a good 4 months of buying. And if we ask now in that 4 months, how many managed to successfully in 4 months, not only in 1 month of those four. If you ask now in those 4 months, how many successfully managed to make money throughout those 4 months, you discover that it's only a handful of people. It's simply because those handful of people or those few individuals are the ones who understand what's going on in the markets. Once you develop your understanding, once you work on your understanding, it's no longer a matter of time. You're getting rich or you becoming a millionaire or becoming actually a millionaire. That's the only language that we speak now. It's only a matter of no longer time necessarily, but it's only a matter of you being aligned with what you now know and understand. You get to that certain level where you becoming a millionaire, it's no longer time based to say, I'm going to become a millionaire in this. No. Putting a time is actually, it actually offers a limiting factor to it. But it's now a matter of alignment whereby you are now aligned with what you now know and understand about the markets. Every time when you apply that which you now know and understand, that's what we call alignment. So when you apply it nicely, uh, you're aligned. And once you're aligned, you start to see money now coming in based on that alignment. Some of you, the reason why the numbers are not even consistent, it's because you're not yet aligned in terms of your understanding. Your understanding, it's scattered. It's scattered because sometimes it can be scattered because the knowledge is even scattered. You don't even know exactly what's going on. So when it's scattered like that, you always have challenges in terms of consistency in profitability. If you don't see consistency in profitability, it simply means there is no consistency, or the understanding also is not as solid as it must be. Right. So if you look at this structure, even from the 1 hour perspective, let's say I must also be let me also explain this from a 1 hour perspective. According to 1 hour, this was still a bearish market, right? Because they had not taken out this level. So even if they were bullish, if they were going to take out that level to confirm to be bullish according to 1 hour, it means that M15 order flow was supposed to be bullish, 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 bullish up until they take out that. So the reason why you see you get to a point like where is this point? Let me look for the exact point here. Okay, or let me just continue. Let me just continue. So remember, 1 hour. This is the this is supposed to be, that's the change of character according to 1 hour, right? So in order for them to take out that, according to M15, they have to maintain a bullish order flow. Maintain bullish order flow up until they take out that level. So in this case, that bullish order flow is going to be your buying opportunities. They broke this structure, came back for another pullback, and the confirmation here to buy was this one. That's according to H1. If you wanted to enter it earlier, you could have even entered within that H1 box. Let's see if we can identify an M15 shift within that H1 shift. Indeed, there is a shift, which is down here. That was the confirmation according to 15-minute. Some of you right now, the problem that you're having is a problem of zones. What if it doesn't touch my zone? What if it doesn't touch? Is it even your zone? To start with, is it even your zone? These zones are not your zones. Some of you, the way you're now married to these zones, as if they are your grandfather's zones. Say they must touch, they must. It's not a must, say. They might not even touch it immediately the time that you want it, but even sometime in the future, they can come back for that zone. So be so careful not to be married to zones. The only thing that uh, I can give you the blessing to be married to is the the candles themselves. If you're going to be married with anything on the market, get married to the candles. Those ones, they will make sure to always give you uh, that which you must see, that which is relevant. You always find it from the candles. The candles have a language. The candles are always speaking. So they broke that structure, broke this structure like that. Did another pullback again, which is this one. If you're going to use the H1 confirmation, you're going to enter maybe using around here. Someone here as well. Someone could have drawn and waited for price to come here. Did price touch there? It didn't. Someone again here could have done the same mistake again, drawn another supply there or even here. I want price to come there before I buy. Oh, you want price to come there before you buy. Okay. Price comes not there where you want it, comes somewhere else, but still it buys. The most important thing is the shifting of price. If you're not educated in that, you always be outside, or you always be left out every time when the market is moving. So in this case, that was the opportunity there. And they kept going up and up and up and up. Then around here, they started to give some form of pullbacks again. They gave another pullback again here, pullback again there. Did a confirmation again to the upside around here. You could have also bought that again. So eventually, they now had something like a change of character. It's not actually something like a change of character. It's actually an internal change of character. So that internal change of character, the reason why it's something that happened actually throughout as we were still buying, it's because now remember what I explained when I zoomed out here. I said this structure is still our swing lower high. This is still our swing lower low. And if they are going to break that, they have to maintain what? A bullish order flow. So in this case, they actually changed character, obviously started to pull back, which is not a problem as well. Sometimes they can even introduce that new structure inside, which is not a problem as well. So sometimes they'll just be doing that to wipe out liquidity. In this case, you have a lot of trend line liquidity lying around some of these regions. You have this trend line, which is here. So there's a lot of liquidity lying below there. They can just drop down to wipe that out. Here, they also came to touch another significant zone, which is this one. So after touching that zone, if you look at the confirmation that we just needed in this case, if you look at this, that was the buying confirmation there. You could have actually bought based on that. Then, boom, they continue with their overall bullish order flow. The order flow to the upside continues like that. Up until eventually they took out that 1 hour zone to confirm that they are now also bullish according to the 1 hour time frame. So there are so many things that we can talk about. There are so many other things that we can talk about. There are so many other things that we can talk about. So yeah, there was this shift and there was also that shift. If you go to a 15-minute time frame, on both of those two shifts, you just discover that either order flow remained bearish or where they fully eventually turned is on the other shift, which is down there. So right here, if you look at this first box that someone could have drawn based on just an H1 shift, this is one long leg from up there. One long leg like down there. They create another leg. They didn't break structure here. So yeah, they haven't broken structure. So they had right to do all these things that they did. Right? Then they now came around here. They now gave you a simple, clean change of character. If you look at these two zones, this zone and this zone, the only zone where you were authorized to buy is on this one because there's a clear change of character to the upside. Change of character there, even if you had entered your your 50%. Sometimes I especially once I have all the confirmations, the least risk management that I use there is 50%. Personally, I'm talking about myself. If I have all the facts in hand, the least risk that I can put on a setup is at least 50%. It's because I'm sure. I'm so sure. So now these were all buying opportunities. Imagine from the 13th of Jan up until almost the 13th of Feb. That was a full 1 month of just you buying. And remember, we are still continuing with buys up until we get there. So throughout the entire time, they're just maintaining um, bullish order flow to the upside. Bullish order flow to the upside. If you come here on the lower time frames, those are multiple opportunities. Not only there, just from this region alone to even up there. If you go to a lower time frame, starting from the 1 hour, then you go to okay 1 hour. Let's use 1 hour. So based on the 1 hour, we had a break of structure right here. Well, let me just put it exactly where it has to be, which is here. We had a break of structure around here, right? Then around here, obviously, the market started to give us other structures. And here they also sort of like gave you another structure. So sometimes when you have things like this, it's very vital for you to include the daily. If you go to the daily on that zone, you discover that there might not be any confusion of structure. If you go to the daily on that region, which is here, according to the daily, this market is just within a buying range. The buying range it actually started. Where did it start? It's actually the bottom is here, and the top is actually here. The market was simply in a buying range. So all those fluctuations that you might be experiencing on the lower time frame, so they just, according to this, that's the proper break, and here that's not a break according to H4, and here they also didn't break according to H4. So according to H4, the higher you go, you discover that there's actually more clarity up there. The higher you climb, even in life, the higher you climb in terms of your perception of things, you gain more clarity of things from that high perspective. So according to this, that was the level, the way you're supposed to buy. If you go to a lower time frame again, M15, M5, M5, M10, M15, we must actually come up with a structure. In this case, you can see that, okay, here they broke, then they changed there. So before even they changed, you could have even bought even around there before they went on to change. Let's go to 10-minute. 10-minute, you could have even entered earlier. According to 10-minute, you could have even entered this trade here. After this happened, even if you bought immediately there, put your stop loss just below, which is here. Still, that was okay. They went up, came back for another pullback. And that pullback, where it ended, it also ended around here, where you could have also bought again if you wanted to buy again. So eventually, the main important thing, especially when it comes to these setups, is to always maximize on the moves. So imagine now you entered nicely on the 10-minute there or whatever. Then you just hit some few TPs there on the lower time frame, and you're already excited and you're jumping out. That's not, to me, that's no longer, according to me personally, it's not something that I celebrate when I see you celebrating a 5 minute TP, whilst you could have held that trade. In this case, even this trade could have been held all the way up because now they were just respecting buying ranges. According to H1 here, they were just now respecting buying range. The only time that they now broke a range, I think what was now up there, which that was now an opportunity again to buy. They broke multiple opportunities, multiple opportunities to buy. Right. So all these were opportunities that you were supposed to take advantage of. The broke structure there, we are buying here. Broke structure there, obviously gave this pullback, shifted there, bought there, came back again there. You could have bought there. So imagine the number of countless opportunities that the markets are going to print out. Here again, almost the same similar thing that happened on this other movement right there. It actually happened again here. If you go to the daily, you discover the market was just still within a daily buying range. That was just a daily. This is a daily buying range. That's the bottom. That's the top. They just pulled back within the daily buying range. The only time that they broke the daily buying range was here, which is also not a problem because they actually realigned to buys again after. So that was not even a confusion necessarily at all because also according to that same daily time frame, them doing that, it's also in compliance to this structure, which was now also because here internally they were bearish. So even if they give us something like this, it doesn't mean that they're now necessarily bearish, going down. It was just a higher high, higher low. Then we go. And the most beautiful thing, even this pullback, let me go to the weekly and show you that even that pullback, there's a level that it was never supposed to even surpass in terms of how deep it goes to the downside. So according to the downside, this is the high. This was the high that we had, and this was the low, according to the weekly. And they just swept out there, obviously, then came back. So in other words, whatever pullback that they were going to do, it was never supposed to come below this region. It was never supposed to come below this line here. So all these, okay, let me just quickly round up so that we look at other pairs as well. They came into that zone. If you go to an M15 while it's even they're down here, you can actually easily identify bullish market structure playing out. If you didn't want to go to M15, even let's say you're going to use the idea of ranges using the H1, they shifted the range right there and they started to print out bullish market structure. So the best thing sometimes for you to even see that bullish market structure playing out is even sometimes to go lower to a lower time frame like this. M15, you'll see structure properly, break of structure down, break of structure there. They create another leg, started to print out bullish market structure, bullish market structure, bullish market structure, just like that. So there were multiple opportunities there. You could have bought from here, the broke structure there, pulled back here. You could have bought there, pulled back again to this extreme point. There were multiple opportunities for you. So imagine buying there, your TP is up there, even if you still held all the way to there. So currently where the market is, as I said, I'm anticipating them to break that level. And this was simply an analysis that you could have just done on the weekly like this, whereby they just come back to your higher low like that, and you're anticipating them to go all the way to break that. Simple as that. So now based on this, let me just go to the 1 hour. Okay, based on this 1 hour structure, you can see here that we had a simple break. We also had another simple break. And this break here gave us an opportunity to buy. You could have bought around there. Buying around there, you could have held this trade. Even up until right now, you could have still been holding because they are still within a buying range right there. They are still within a buying range. So now If they give you a pullback, potentially to this level, yeah, that's one of the levels that I'm looking to. They give you a pullback there. All you want is an upside shift once they get there. An upside shift once they get there. Just wait for an upside shift, then you jump in. Sometimes you might see me even, let's say, for example, I'm on this zone. I know definitely that's a high probability zone, but sometimes you can even see me going down to M5, whilst I'm still on that same zone where I'm anticipating price to shoot up from. So this is the zone that I was anticipating price to shoot up from, but still, I will still look for those more confluences. For example, let's say I wanted to use M5. They tapped my zone. According to M5, my first entry, I could have entered even right there. Got there, obviously went up, came back down again to the same zone. So maybe this first entry could have closed on break even. They came back to the same zone, break even, or even maybe I would have experienced drawdown. Let's say if I just decided to keep holding with my stop loss measure on just below here. So they put back to the same zone, then they did another shift around here, came down, did another shift. So here there were multiple shifts. Did this shift, you could have bought. Stop loss, you're not putting your stop loss here. Some of you now, there's this idea that hey, I want a tight stop loss. Some of those ideas sometimes they're just crazy ideas that people come up with for nothing. There is no necessity for you to put your stop loss here. Because look at this, they just came, they sweep you out. Because according to structure, even if they do this, they are not violating any structure there, right? So sometimes it's just safe for you to put the stop loss beyond even the whole entire region where you're buying. So that even when they now came and gave you another confirmation, which was this one, you now even scale in, while you know that I'm still in even on the first trade that um that I was still in. So that was the confirmation there, and also other entries that you could have also entered are some of these entries on the pullbacks that they were now printing out. So many multiple entries to scale in. From this one, broke structure there, pulled back there, you could have bought, broke this structure, pulled back there, shifted here, you could have bought, broke structure there, came to the higher low, which is here, you could have bought, stop loss below, broke structure there, came all the way to this higher low, you could have bought. All these are those kind of opportunities where you can even enter. Do you know that once you really maximize on most of these moves, even now when the market is playing around, you're not going to be necessarily chasing it for an opportunity. The people that are going to be chasing the markets for opportunities are those ones who are not maximizing on where they should maximize. If you're not maximizing where you should maximize, those are the kind of people that will be now wanting to enter where they're not even supposed to enter. So roughly, we can have a slight pullback into this region, then confirmations to the upside, then we keep up until we break that structure. So this is what I have so far on GBPUSD. Imagine buys upon buys for a good 4 months. A good 4 months of buying. A good 4 months of buying. Let's look into the other pair. I think Euro USD, it's also almost the same thing. Let me see. Is it the same thing? Because these two pairs, they almost have what we call a delayed direct correlation. But let's see. Let's just look at it individually. You can see that overall they are uh overall bullish. Overall, like looking at the monthly, you can see that this pair has been bullish since 1985. Since 1985, Euro USD has been on a major uptrend. They came back again for a pullback to 2001, pushed up again. Now we are now in 20. If you calculate one of the most interesting things about the markets is there is a certain rhythm that they have, whereby if you're going to calculate the number of years, let's say uh, from here to here, and from here to roughly here. Right. The number of years it took for them to go up and pull back to that same zone. This was, what year was this? This was 1985. to the year 2000. That's like 15 years, right? From the year 2001 to here, which is 2022, that's almost like 21. So if we put here, I want you to see something here. 15 here, and here we are saying 2020 or 21, right? So potentially just this difference alone can tell you how the momentum is increasing to the upside, whereby the next major move or the next major push can actually be longer than this. So that here you might find it can even take 25 years or 30 for it to even pull back again after this major break. It can even take another good. So that's not really the main thing that I want you to focus on in this particular um analysis. But let's just look into the analysis now and see what is it doing. Is it going up now, or it still has some certain zones too? So Euro USD also, it's in pair. If you look at most of these pairs, they have so many beautiful swing opportunities that they are printing out. From odd USD, I showed you the swing opportunity that is there. To Euro USD also. So Euro USD, looking at this, it can still touch this demand. If they don't come to touch there, it's also still fine because they would have touched this institutional zone, which is still also okay. So how do you know that they're not going to come and touch there? Once they confirm to be overly bullish here, in this case, according to the monthly, once they come and take out your internal higher low, lower high actually, which is this one. Once they come and take out that level, that's when you know that they're never going to come back there. Something like this. So currently we're bullish. You can see that they are strongly bullish like that. So what we now need on the lower time frames, we now just need setups that are in that direction of momentum, which is the bullish side of things. So looking at the bullish side of things, you can see that here we had a simple, almost a slight change to the downside. Then obviously here they now confirmed back up. Potentially they can now even start to ride on this bullish structure up until they get there. So meaning if they are going to pull back, they can just pull back to around even here, then keep on buying. Pull back there, then keep on buying. Something like this. So the pullback is always imminent, especially after they have broken structure or changed that character like what they've done here. Pullbacks are now imminent. The most important thing is not these zones that you drop there. Those ones are not important. The most important thing is the shift. Once you identify price shifting nicely there. So here, Euro USD can actually print out beautiful swing sells, beautiful swing reversal sells into this zone. That can also take even, they can sell even for a full 1 month, which is roughly 4 weeks, or even 5, depending on how much the momentum will be to the downside. But this is a setup that I currently have right now on Euro USD. Very beautiful setup. So now once you have a setup like that, and you now go down to lower time frames. Lower time frames, you're not going there to start analyzing entirely to say, where is the market going? Where is the market coming from? No. On the lower time frames, all we now need now at least a bearish market confirmation for us to be authorized to start selling, because we can't talk of buys now based on now what the weekly has done. We could have talked about buys if maybe price was still down here in this box here. After this, after this, you see a reversal from here, and that reversal, you see how it began according to lower time frame structure. I want you to see how this reversal began, or how this move rather began to the upside. That's the same thing that we need here for us to know that the pullback, these major pullback sales have begun, because here they have completed an institutional cycle. The same way they completed an institutional cycle by this, complete an institutional cycle, pullback. So yeah, they were basically supposed to pull back and keep selling, but it's also still okay because they are still showing you that there's still momentum to the upside, which is also still fine. So complete an institutional cycle, pull back, then we continue. So the confirmation that happened here is the confirmation that you need here. Let's go down to the H1. Oh, right here. That's the same confirmation that we want up there where the market is now. If you look at this overall structure, you can see that, okay, here we have a major break. Also have another major break. Then right here we have a simple, clear change of character. That was the change of character there. And this is actually this year, right? This move actually started this year. It's also almost the similar, almost the similar buys to GBPUSD, the ones that began this year. Changed character like that, came back all the way to this demand. Then boom. Once they enter that zone, like in this case here, you go to a lower time frame, lower than even the 1 hour, even if you go to M15 on that zone, M15, M5, M5, M10, M15, M20, all those time frames can even help you enter, especially once we've tapped our region like that. M15, okay. Let me go to M10 or M5 so that you see how sometimes when you see us opening M5 charts, that's not where the analysis is starting from. The analysis would have started somewhere else. All we are now just going there to do is just necessarily for maybe an earlier entry confirmation, not necessarily an analysis. We're not going there to start analyzing and starting to wanting to see where the market is going or coming from. So here, I can say that was a confirmation there. And there were other confirmations that were playing out here. So even if I had bought around here, broke there, came back another for a pullback again, buying also there. All these were opportunities, or rather, entry criteria that you could have used for you to enter. They broke there, came back again for a pullback here. So how many opportunities did you have to enter? You had this one, you had that one, you had this one. And your TP is way, way up there. That's where your TP is. Obviously, there were pullbacks, but even just this push from here, that was February up until I think this was just a short-term move. But still, they came back for a pullback in 1 hour ranges again. Right there, they broke this buying ranges. So meaning you would have exited. Then they actually now confirmed back up around this region where you could have now continued buying. Broke there, all the way up until they also came to this level, almost did a liquidity sweep. If you go to an M15 structure, you'll see a change of character again here. You could have also entered those buys again. So this is what we now want up there because they've completed an institutional cycle. So now we now need something of that nature up there, which is a simple change of character down before we can start looking for selling opportunity, because before we can start selling rather. So the confirmation for sales here, it has to be something like this, then a pullback, then we go. Then we start catching all those bearish market setups up until they come to the zone that we have marked where they can actually pull back onto, which is, I think, this region here. So you might have swing sales up until they get all the way down into that region. Then they now continue until we get there. So these are the two major moves that I'm anticipating on Euro USD. The swing sells and the continuation buys. So the markets are just doing the same thing over and over again. That's one thing that I think I've mentioned. I've said this almost 100 times. Whether you're opening a synthetic indices market or you're opening a crypto market, these markets are doing the same thing over and over and over again. So yeah, they've done this um major change of character to the upside. So they can give a major pullback, obviously, but before they do that, we need to take into consideration now internal structure. So internal structure, they now must change character internally there. According to this, the change is actually way, way, way down here. So this pair, if it wants to change there, they can even sell for a very long time up until they even get to that zone where you want them to get to. They can even pull back all the way to here. That would be a very good pullback. They pull back all the way to there. So all we now need there are confirmations upon confirmations. Go to a weekly. This pair actually gave some very crazy swing sells for the last couple of weeks or so. So yeah, this is the structure that we have. We have this swing, that swing. If you go to a daily, this is the daily, this is the daily, and on the daily, we had our first internal change of character, which happened here, changed there, came back for a pullback. So this one was the first major swing sales that you could have caught all the way from up there up until where the market is now. What did they touch here? We want to see which zone. So it's not really important about which zone. Let's forget. Okay, even if let's say I mark this supply, which is mini supply of this first supply zone here, I also have another one there. It's not about all these zones. So here, obviously, they are going to take out this potentially. They're going to take out this before maybe they give them the slight pullback before a continuation. So the next pullback in this case, they can just pull back maybe to even internal, sub-internal structure, which is this one, whereby they can just break there, pull back there, up until they get to take out this major level like that. So this is also a setup that I have on USD JPY. So I think for tonight, looking at the major pairs like what we've done, I think it's enough. Then tomorrow morning, we also try by all means to have an early morning session. The morning session that we're going to have is going to start exactly at between 4, 5, and 6. Choose 1 hour there. Which time do you want us to start? Between 4, 5, 4 a.m., 5 a.m., or 6 a.m.? Which one do you want? Which one do you want? Between 4 a.m. I just want to hear from you guys. Personally, I can do 4, I can do 5, I can do 6. So I'm asking for you uh between 4, 5, and 6. Which one? Which is which? I just want to hear the majority of votes are the ones that we are going to pick. If most people vote for um uh-huh. Look at all these selling opportunities that were presented after this change of character. Did a pullback there. Major swing sells that were available. It actually started up there before even they came to change on H4. H1, I think even confirmed earlier here, changed there, pulled back there. Look at this. Pulled back there. Major swing. Enter that one, dropped, pulled back, dropped. So yeah, they're just playing around in one zone. So you could have eventually caught this last push. Broke structure there, pulled back the first time, shifted there. You could have caught those cells. Um, Came back up again, shifted again. Those were selling opportunities. I can just mark this region here. Those were the levels that you're supposed to sell from. On those levels, if you're just supposed to go down to your your M15, your M15 structure on those zones. For example, this one dropped, came back for a major pullback there. Then they gave another simple change of character. Change of character there, pulled back here, shifted down. So this first shift down was a confirmation. Then they came back again and shifted on the same zone. That was the entry level there. Dropped, pulled back, shifted down, came back. This one was way more simpler even because that was a break of structure, pulled back all the way to the lower high. So let me just see your answers just quickly so that we conclude on the time for tomorrow, where we will look at indices, US 30, NASDAQ, is it German what? Can you analyze gold? Tomorrow morning, sir. 4 a.m., 5 a.m., 4 a.m., 6 a.m., 6 a.m. So we have 2, 6 a.m. So I'll just put the thing on the group there so that we see how, what many